In this video, we are going to talk about crypto crash or opportunity, understanding the cryptocurrency market. So before starting this video, please like this video and subscribe to our channel for future updates. The cryptocurrency market has been experiencing a significant downturn in recent months. From its peak total market cap of $3 trillion in November 2022, the crypto market's worth has plunged between $1.05 and $2 trillion by January 2023. This crypto crash, led by major cryptocurrencies like Bitcoin and Ethereum, has erased substantial amounts of value, causing ripples of concern among investors and regulators alike. This market crash is the result of a complex interplay of various factors that include economic, regulatory, and market dynamics. These factors, combined with a shift in investor attention from Bitcoin to newer, smaller cryptocurrencies, and the broader global economic uncertainties, have contributed to the current state of the crypto market crash. Factors contributing to the crash. One of the key factors contributing to the crypto market crash has been the economic measures taken by the US Federal Reserve. The Fed, in a bid to combat inflation, has been aggressively hiking interest rates, with 10 consecutive rate increases over the last year. This has pushed interest rates to their highest levels since 2007, affecting the dynamics of the financial markets, including cryptocurrencies. As a result, Bitcoin's appeal as an inflation hedge has diminished, with billionaire hedge fund manager Paul Tudor Jones indicating that the game of buying Bitcoin as an inflation hedge might be over. Furthermore, data shows that US consumer inflation fell to its lowest rate in 2 years following these rate hikes, further diluting the case for cryptocurrencies as inflation hedges. Regulatory scrutiny of the crypto industry has also increased significantly, contributing to the market downturn. In the US, there have been reports of a secret plan for a game-changing crypto crackdown, indicating a more stringent regulatory environment for cryptocurrencies. The entire regulatory apparatus in the US seems to be aligning against Bitcoin and other cryptocurrencies. This has led to a situation dubbed Operation Choke Point 2.0, where politicians are unofficially forcing the crypto industry out of the banking system. Finally, market dynamics and investor behavior have also played a crucial role in the crypto market crash. There's been a noticeable shift in investor attention away from Bitcoin towards newer, smaller cryptocurrencies in recent weeks, a phenomenon that Wall Street giant Morgan Stanley interprets as a signal that the Bitcoin price top is in. Impact on major cryptocurrencies. The crypto market crash has had significant impacts on major cryptocurrencies, notably Bitcoin and Ethereum. However, the specific details regarding the extent of the impact are not readily available at the moment. Number 1. Bitcoin's dilemma. As the most prominent and influential cryptocurrency, Bitcoin has borne the brunt of the recent crash. The cryptocurrency, which has been considered a reliable store of value and a hedge against inflation, has seen its value decrease significantly. Notably, the leak of a US plan for a crypto crackdown, combined with indications that the Federal Reserve's aggressive cycle of rate hikes might be coming to an end, has added to the downward pressure on Bitcoin's value. Number 2. Ethereum and altcoins. Ethereum, the second largest cryptocurrency by market capitalization, has also been affected by the market downturn. Additionally, smaller, newer cryptocurrencies have been significantly impacted. The crash has triggered a shift of investor attention away from Bitcoin and towards these smaller cryptocurrencies, a trend that historically has often occurred around market tops. Number 3. Regulatory concerns. The regulatory environment is another factor influencing the impact on major cryptocurrencies. Regulatory threats, particularly in the US, have been highlighted as a real problem and a significant concern for the future of cryptocurrencies. The increasing regulatory pressure could potentially lead to a further decline in the value of cryptocurrencies and stifle innovation and development in the crypto industry. Industry reactions. The crypto market crash has not left traditional financial markets untouched. The S&P 500 index, a common barometer for US equity markets, suffered a loss of 2.7% this year, indicating a ripple effect from the crypto market downturn. This shows that the turbulence in the crypto market is starting to impact traditional financial markets, creating a more cautious investing environment across the board. On a broader scale, the economy is also reacting to the crypto market crash in conjunction with other factors. Rising house prices and increasing wage inflation are significant considerations, especially in the face of the crypto market downturn. These factors could further push investors away from riskier assets like cryptocurrencies, adding to the downward pressure on the crypto market. So this is our today's video. If you like our video, don't forget to subscribe to our channel or hit the bell icon. We will meet again with another interesting topic. Till then, stay safe and stay happy.